Self-managed super fund clients appear to be showing quite a bit of interest in direct property, but the subdued residential property market has resulted in a fairly flat take-up. Dixon Advisory Associate Director Tim Coates confirmed inquiries about direct property were on the rise, but the actual take-up could be a different story.
We're seeing a large number of investors coming in and asking about direct property inside superannuation. People are now much more aware of what you can and can't do with their super, and they're looking at direct property as an alternate investment opportunity compared to more traditional bonds, traditional equities or managed funds.
Exposure to direct property for Dixon's SMSF clients remained in the 6 to 7% area over the last 12 months, but Coates believes it is only a matter of time before direct property becomes a growing sector again.
You only have to look at real non-residential property, which currently makes up 10% of the asset allocations for self-managed super funds. Residential real property is only currently 3%. So, given how popular residential property is in the wider community, it wouldn't surprise me at all if we saw that 3% increase to 10 or 15% in coming years. Right, in the current environment, a lot of people are lacking some confidence and they're choosing to sit on the sidelines and hold a lot of cash. But as we see confidence return to the market, we're going to expect to see a lot more people taking up these types of strategies.
However, some managers are sceptical about this sector, pointing to less than satisfactory returns and fears of a housing bubble in Australia. Tim Coates played down those fears.
If you look at sort of the fundamental changes that have taken place through people's increases in disposable income and the structural changes that have taken place to interest rates, those two factors alone can nearly account for all of the price growth that we've seen over the past few decades. The fundamentals of the property market in Australia are very sound. We've got an increasing population, we've got a decreasing rate of dwelling approvals, and we've got an undersupply of housing, which is really going to put a floor under any house price movements.
Also in money management this week, industry calls for change of direction in the debate around life policy churn, and our news editor Chris Kennedy looks back on the FOFA process and the 3-year journey from the announcement to Parliament.